Does the Shark Tank celebrity Kevin O'Leary have zero remorse for retail investors who lost everything following the recent collapse of FTX? More than 1 million investors had cryptocurrency stored on the FTX exchange and are owed money which they may not get back. Company records show FTX customers were based in 27 separate countries, with the Cayman Islands, Virgin Islands, Great Britain, and China having the highest proportion of users. During the FTX court hearing on Tuesday, Judge John T. Dorsey was given a detailed history of how FTX became the second largest cryptocurrency exchange before collapsing in just 8 days after a leak about the company's lack of financial stability. Court says Sam Bankman-Fried ran FTX as a personal fiefdom, while the lawyer leading the attorney proceedings, attorney James Bromley, says the former FTX boss led FTX, once valued at $32 billion, but lacked basic money controls. It's not known how much money FTX retained after the collapse, but James Bromley says that at least some of the firm's cryptocurrency assets have apparently been stolen by hackers, and on top of that, in an interview with Markets Insider and CoinDesk TV, Kevin said he would invest in FTX again if the opportunity arises, but this time he would still do it without giving him the operational control of the assets, just the trading control. Kevin said, "You can love him or hate him given what's happened. Sam Bankman-Fried was one of the most brilliant traders in the crypto universe. He also built one of the most robust platforms. We used FTX actively. It was a very robust platform that allowed us to get information on a compliant basis, so I really liked what he built. FTX has one of the largest cryptocurrency exchanges in the world, so I want you all to know that we're still in it." He said watching what investors do from an institutional level is going to help in stabilizing what the rules are going to be, because crypto is not going anywhere. O'Leary said what's going to happen is that a lot of institution money is going to live in unregulated exchanges and trying to find other places like BitBuy in Canada to put their capital. We need regulation. We can't have a situation like this. Despite the historic financial downturn, O'Leary claimed he'd still be more than happy to take a chance on Bankman-Fried. "The one lesson I'm going to apply is that there isn't a chance in hell that I will ever put any crypto assets onto an unregulated dealer or broker-dealer exchange, and I won't push any asset in any platforms that are litigating the regulators. I'm not doing any of that." Kevin also disclosed he now has a new place to park his crypto investments, which he believes is the only safe place for crypto in the world for those who can't use cold storage. The Shark Tank investor said he's moving his assets to Canada-based BitBuy and will no longer keep funds in unregulated exchanges. Canada is the only country that offers fully regulated broker-dealer exchange accounts, he said. Meanwhile, O'Leary mentioned losing his assets and investments in FTX.com and FTX US, but didn't disclose how much he lost. He only pointed out that the collapse might be a silver lining for crypto by encouraging more regulation. He also said, "I'm writing that all down to zero," O'Leary told Insider. "It's not clear what can be recovered. There are a lot of allegations flying around, but frankly, I've seen this movie before. It's a difficult situation. There's no question about it. There'll be a mountain of litigation." O'Leary came under fire after saying he would still back former FTX CEO Sam Bankman-Fried. The founder of digital assets research firm Reflexivity Research, Will Clemente, tweeted, "Unbelievable. Kevin O'Leary said he would back SBF again, and he was a great trader? Kevin, you do realize he was front-running and counter-trading his own customers and dumping accumulated tokens on his own customers?" He added, "You can't be serious. O'Leary isn't the only celebrity under fire about FTX. An FTX user is suing NBA team Golden State Warriors, accusing them of fraudulently promoting the FTX exchange after losing $750,000 due to the platform's collapse. The plaintiff, Elliot Lam, filed a class action lawsuit in San Francisco against Sam Bankman-Fried, former CEO of FTX, Caroline Ellison, CEO of SBF's trading firm Alameda Research, and the Golden State Warriors, seeking $5 million in damages, according to Reuters, which had access to the lawsuit. Due to a large number of fans that follow the current NBA champion, the lawsuits haven't stopped coming. In addition to Lamb's, the team is facing a class action lawsuit in Miami from FTX US customers who are suing the team and several celebrities such as quarterback Tom Brady and tennis player Naomi Osaka, among others. Warriors star player Stephen Curry is another celebrity under public scrutiny. He's being sued in Miami for promoting FTX. Here's the interesting part. Sam Bankman-Fried earlier this month took to Twitter to apologize to investors and said, "I sincerely apologize," he said in a rapid series of 22 tweets on Thursday. He also promised to continue trying to save the company. "So right now, we're spending the week doing everything we can to raise liquidity. I can't make any promises about that, but I'm going to try and give anything I have to if that will make it work." Mr. Bankman-Fried resigned as FTX chief executive earlier this month, and the firm filed for bankruptcy protection, seeking the court's oversight as it attempts to resolve its debts, and John J. Ray III was appointed new FTX CEO. FTX Global Assets Review begins, and the new CEO pleased some entities have solvent balance sheets. Based on our review over the past week, we're pleased to learn that many regulated or licensed subsidiaries of FTX within and outside the United States have solvent balance sheets, responsible management, and valuable franchises, FTX Group's new chief executive officer John J. Ray III said in a statement. A filing in Delaware earlier this month showed FTX Ventures, which launched a $2 billion fund in January, had less than $800,000 in available cash, it said. According to Stephen Deal, a computer programmer who has lobbied U.S. legislators for stronger crypto regulation, said the collapse of FTX could be likened to banking giants such as JP Morgan or Citibank disappearing overnight, something that would be difficult to imagine following the introduction of stricter regulation for banks in the wake of the 2007 to 2008 financial crash. There's so much unknown in the situation. This is like an onion being peeled. The former FTX boss led the firm, once valued at $32 billion, but lacked basic money controls, a lawyer Bromley leading the bankruptcy proceedings said. He also claimed Mr. Bankman-Fried's team spent roughly $300 million on holiday homes and property for senior staff. Over the past decade, the sector has seen the emergence of larger crypto bubbles, followed by more spectacular collapses and greater losses, with investors' trust betrayed. U.S. SEC Chair Gary Gensler has been pushing for greater crypto regulation since his nomination in April 2021. Last year, he described cryptocurrencies as an asset class rife with fraud, scams, and abuse. Most failures and loss on investment usually happens when you invest without proper guidance and the analysis of the profit and risk percentage of the investment. FTX was one of the largest crypto exchanges in the world until earlier this month. It fell apart in a matter of days. FTX was a cryptocurrency exchange allowing people to buy Bitcoin and other crypto coins in exchange for traditional money. Many customers use their FTX digital wallets like bank accounts, expecting their funds to be safe. The FTX collapse is not killing crypto, seeing how well huge cryptos like USDT, Bitcoin, or even Ethereum are functioning right now. Of course, there's also a dark side, namely the downfall of the entire market, which will most likely turn into a crypto winter, but we'll get through it. If you're not in the financial market space right now, you're making a huge mistake. I understand that it could be due to ignorance, but if you want to make your money work for you, prevent inflation from eroding your savings, build generational wealth, and cultivate good habits and financial knowledge, you must be in the market. Most people don't really invest due to ignorance and discouragement from family or friends without trying to experience it themselves too. People are scared of investing because of the high rate of risks in the business, but according to Jesse, the founder of US exchange Kraken, these are growing pains. Money can be made again, summed up in a lengthy Twitter thread earlier this month.